Welcome back, everyone. It is Michael here with Offshore Citizen. One of our viewers, Wagme, had asked a little while ago if I could please make a video on the subject of optimizing a UAE company for payment processing. I'm going to give you some context around how this works in just a second, but the bottom line is when you're in certain situations, and this, what I'm going to discuss will apply not just to UAE, but to companies all over the world, you're often optimizing for one variable, such as tax, and you end up screwing up another variable, such as payment processing or banking or whatever. And this is why a multidimensional approach is really, really important. This is why when we're working with clients, we are reverse engineering from many different angles to figure out what is the best solution for you. And I often have people call me up and say, you know, is BVI great or is Seychelles great or whatever? The answer is there's no one size fits all. It always has to be tailored to what it is that you're doing, and you need to optimize across a bunch of variables. So it's just not as simple as which country you pick. Anyway, today I'm going to talk to you about how to optimize your business across multiple variables when you're setting it up, including in UAE, and we're going to discuss how to optimize your payment processing, your banking, as well as your tax. So let's dive in. Before we do, if you haven't already, please hit the subscribe button, hit the all notification bell. If this is your first time here, welcome. I am Michael. We are some of the foremost international tax experts, and we are here to help you with relocating yourself or your business around the world, optimizing global tax, protecting your assets, doing international banking, etc. If any of those things are interesting to you, please feel free to reach out to us. You can book a call with me, calendar.com/Michael-Rosmer. There's a link in the description below, or send a message through offshorecitizen.net. Okay, so here's the deal. Let's say that you go and you set up a company in UAE. Although the same principle would apply in Singapore, or would apply in Hong Kong, or would apply in a variety of other places. Okay, BVI, Seychelles, Belize, Nevis, Cook Islands, etc. The same principle applies all over the place. Okay. What you may find is that either you can't get payment processing for your business, meaning you can't accept credit cards, or the costs are substantially higher. Now, this is not always true, okay? For example, in the case of UAE, PayPal is extremely expensive when you start, but if you can get a private rep and negotiate with them, you can actually get really, really favorable rates, which is kind of a bizarre thing that not many people know about. We've helped people save quite a lot of money that way. What happens is that the card schemes, which is the term for Visa, MasterCard, American Express, etc., tend to set their pricing based on regions of the world. So they have this what are called interchange tables, essentially tell them based on a certain type of card and a certain region, etc., what the price will be, and that's the base price, and then the providers will mark up on top of that, okay? These vary regionally. They tend to be the lowest in the EU, so this is because the EU has sued the hell out of Visa and MasterCard and forced them to drive their interchange rates down quite low. Interestingly, that didn't really result so much in those savings being passed on to customers, but that's a whole other conversation. The bottom line is places like UAE, I have a friend who's moving to Cayman Islands in about a month, and not good in Cayman Islands, et cetera, et cetera. The rates are just going to be higher. So the easiest way to see this is to just go and take a look at Stripe and see what the Stripe rates are. So that Stripe happens to support UAE. You're going to find the rates are higher, but on top of that, you are automatically forced into settlement in dirhams, okay? Which means, let's just say you're doing your media buying in US dollars, let's say your clients are paying in US dollars, but everything gets converted to dirhams, so you're going to have a conversion rate on top of the higher payment processing rate, and then you're probably going to have to convert back, so you're going to get hit twice. So this can add a few percent to your overall cost. And that might not seem like a lot. Like what some people will say is, well, hey, you're saving 20, 30, 40, 50% tax, and so it's worth it, right? Well, the thing people have to understand is actually that rate on payment processing and on conversions, et cetera, is a percentage of revenue, not a percentage of profit. You're only taxed on profit, not on revenue, in most cases anyway. And as a result, if I'm paying, let's say, 2 or 3% more for my payment processing, but it turns out that my margins are, say, 20%, which wouldn't be a crazy margin to have, then you're talking about a 3% multiplied up by 5-fold, right? So based on a 20% margin, would equal actually a 15% of profit tax. So that's an effective tax you need to consider, right? We talk about tax, we also talk about effective tax, and this is like all the extra costs that come in. You don't really care, or maybe you shouldn't care, how much tax you pay. You should care how much money you have in your pocket at the end of the day, because that's what's going to be effective for you, right? And so as a result, one of the things that you can do in order to get around this, and something we help clients with quite often, is we layer companies, okay? Now, lots of different ways that this can happen, and it's very specific to you. I was talking to a client from the US today who was living abroad and had to deal with guilty tax, and how it was that they optimized their payment processing, but ultimately optimized for the tax, but they want to optimize at the corporate level and then also at the personal level. Bottom line is, when you're doing that, you have to think each legal entity might serve a different purpose. And so one way to do this, for instance, would be to set up a subsidiary under the UAE company. This company could be in the US, it could be in UK, it could be in Canada, it could be in Cyprus, it could be in Estonia, it could be in a variety of different places. But that entity will do your payment processing for you, keep your costs low, and then pass the income down to the parent company, okay? Again, similar concept applies in Hong Kong. In Hong Kong, the processing costs are slightly higher. You'll typically be forced to settle to Hong Kong dollars. Often, if you're using a card locally, you're going to pay in Hong Kong dollars. The infrastructure is just not really that set up for some of these other things. So what we'll often do is we'll say, okay, well, let's do our card infrastructure someplace where we can get US dollars. Let's get our payment processing somewhere that's going to get us the lowest possible rate. And then let's flow all that through a Hong Kong entity, which maybe is going to give us better taxes, and then we're going to bank in wherever else to make that work. So bottom line is we want to put all of those pieces together. Georgia is another great example. It's very, very difficult to get payment processing at all, let alone good payment processing in Georgia. Not very e-commerce friendly in that regard, but by being able to layer these companies in, you can take advantage of that and possibly actually over-optimize on the tax side in ways that you wouldn't have otherwise. So that's sort of the basic idea, is to think of it in terms of, okay, I have a problem. My problem is I want to reduce my payment processing cost in this example. It might also be I want to get better banking. I want to gain access to financing, loans, raising venture capital, et cetera, right? I want to do that while at the same time I want to optimize for tax. So, okay, can I layer companies on top of each other in order to get the right mix match of what I'm looking for? And again, that's very specific to the person situation, but I think can be really, really useful. And it's not our default. You always, or in my opinion, we always try and make the simplest possible solution as the base case. But if you need to, and especially as you grow, it becomes more and more justified, then start layering these things in. Maybe it costs you a few $1,000s a year extra for the entity, but on the other hand, you end up saving tens of thousands of dollars in fees or gaining access to markets or resources, et cetera, that you wouldn't otherwise have. So I hope that helps. If you want help with that or any of these other things, please reach out to us, and I'm going to look forward to seeing you on the next video.